Check, check. Quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
We can hear you loud and clear, Coach Jay. How you doing today? And how are we doing out in at the buzzer?
Doing well, doing well. Happy Wednesday, everybody. Doing pretty good. Doing pretty good. The wild Wednesday in the markets, but made it out alive. JD says the charts finally moved. Got some nice movement. Bought a decent trade. We'll talk about it a little later. But a good day overall. But welcome everyone to At the Buzzer, our market recap. This is your first time here. The goal of this segment is to review what happened in the markets for the day. May talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity. We want to see how we could take advantage of those opportunities while managing our risk. If this is our first time meeting, I'm Coach Jay. I've been a top set performance coach since June of 2023, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
And I'm Coach Paul. I've been with Topstep for 2 years. I've been in the futures trading industry for 4 decades. I'm here to share some experience, some knowledge, and hopefully help you become a better trader.
Awesome stuff. Thank you for that, Coach Paul. Let us know how you did in the chat. Were you up on the day, down on the day? Anything that you learned from the day? I see Luis saying, shout out to Dan Trader, first of all. Always first in the chat. What's up, Dan? Hope you're doing well as well. But Luis said, was $180 away to pass a combine, went on tilt and blew it. Luis, that is a real thing that happens to anyone. It can happen to anyone. Um, it's that focus on I need to pass this combine today. It's that monetary focus. Just be aware of that when you're trading, and manage the downside. Right. A lot of times, what happens is either I'm going to pass this or I'm going to blow it. Uh, that's kind of a coin flip. Or we want to try to stay away from that. Right. So set what you're okay with losing in the account, even if it takes you one more day to pass your XFA, to pass your combine and get into your XFA. Uh, try not to start over from scratch every time. Uh, got greedy on the combine today, paid the price from Hypercube. Yeah, I mean today's price action kind of there was some decent trading, but I think it required patience for sure. How to keep your XFAs? We'll talk about that in a little bit. But let's get into these markets. As far as the news goes, uh, didn't really have much as far as planned news again. Well, we had crude inventories. Crude inventories always, a shot in the dark whether or not they're going to get that number accurate or not. Came in at 1.328 million. Forecast was negative 1.1 million. We did have mortgage applications number come in negative 5%. Previous number was 1.1%. The bond auction, we'll talk a little bit about that. Coach Paul, I'm going to throw that to you. I want you to talk a little bit more about how bond auctions, maybe why this one specifically can affect the equity markets, because I think a lot of people are asking, hey, is that another thing that I have to watch out for, bond auctions as well? So I want you to talk about that one a little bit as well, Coach Paul. Um, but that was really it on the news. Anything else that you have, Coach?
Um, you know, I guess the bond auction caused that huge move. Um, didn't pay attention to the news. Um, I happened to be short the bonds and long the equities. So
Okay.
it was I etched out a little bit of profit, but overall, not much. I don't see any big news. Um, but it was not good action for equities. Um, seemed this got rejected in a hurry, and that all happened in half an hour. And we were talking earlier this week about bonds being heavy.
Yes, we have been. Yes, we have been. So we'll talk about that a little bit. Let's get into the charts. There are 35 different markets we can trade with top step accounts. And today, to the downside, we had the Nikkei down 1.99%. The Dow, shout out to the Dow. The Dow is what I traded today, down 2%, 2.03%. And the Russell down 2.91% for our biggest
Yeah,
percentage mover to the downside. Uh, Micro Bitcoin up 1.25%, silver up 1.66%, and platinum, our biggest percentage mover to the upside at 2.62%. That's 2 days in a row now. Platinum is in that top 3 percentage mover. We saw the day platinum had yesterday. Looks like it's continuing that rally. Uh, to talk about our big four, we had crude oil down 1.08%, the S&P down 1.75%, gold up 1.04%, and the Nasdaq down 1.47% to round out our big four. I have a Nasdaq chart up here. Let's go out to the daily. Take a look. What are we looking at here, Coach Wall?
A little more correction, um, which was due. Um, but that I don't think that chart does justice to how quickly this was sold off today.
Very quick.
And that and the volume is picking up to the downside. It's the heaviest volume of the week. This is real selling. This is not just profit taking in my from my analysis. We're in that range from last week, but that volume, especially how quickly it broke, it's still above the 200, but some kind of news has to change it, or this could pick up some momentum to the downside. You were talking yesterday. Looks similar to the highs from last February,
Yep.
and it's kind of looking like that a bit.
Yeah, a
Um,
little bit. I think the ranges were a little bit tighter up here, but I think this is kind of showing us the environment that we're in, where ranges had increased. But yeah, this very similar action.
yeah. Um, so how about you? What do you see on that daily?
So we haven't tested that 200 moving average since we broke through it, right? It was resistance. Haven't even really tested it as a support on a higher time frame. We can see most of these daily candles. We broke above it, and we kind of continued from there. So I think the next few days, maybe even tomorrow, it's about a 1.5% down in the Nasdaq. Will tell us whether or not we are in 2022 or is this different, right? We talked about the "you are here" map. This was the first test of the 200 moving average since we crossed under it. Uh, is this going to hold, or is this just a bounce in a bear market? Uh, so will be interesting to see the S&P back under that 200 moving average on the daily and closed under it. So looking for something potentially similar in the Nasdaq here. Go
Yeah,
ahead, Coach.
very interesting that the S&P is under it and the Nasdaq still is kind of far away. Um, that the S&P looks, if we put that line um chart, put a line chart on, yeah, that doesn't look healthy to me. Maybe correction down to the 20-day moving average. Um, but it's got to reclaim that 200. And look at the volume there too. Highest volume in a week,
Yep.
higher than average, and it was sudden. So, and it if we go to the half an hour, now we have all the moving averages under the 200. Look at that. I mean, I felt safe. I got caught in that. I lost my two ATRs on the buy. Um, in a hurry too. It looked good until it didn't. So, that chart does not look healthy. Looks like we could get a bounce maybe, but I'm not looking to buy it anytime soon.
Yeah, I agree with you. So let's take a look at last night. When we get down to a shorter time frame, I do want to do a four up and compare the four different equity markets. But here's last night's open. We had first 30-minute opening range. VWAP never left that range to the upside. Price tried to just a little bit, but we can see even later on in the day, these same prices, the market came up and rejected it. Really, look, I mean, look at the lack of volume on the way up here. Where
Yeah.
we talked about it, the market needs volume to move, right? It's not just going to break through some of these bigger prices and major resistance levels on no volume, right? And usually to the upside, it's going to be lower volume, but this on a 30-minute is concerning. That's a, everyone was waiting for that bond auction, is what that looked like. and price was just floating up, came up to an area of resistance and rejected pretty strong off of there. Let's go down to a 3 minute chart really quick. I'm going to see how fast I can do this. Uh, pull up the four different equity markets. We're going to have the S&P on the top left. We're going to put the Nasdaq on the top right. Need to get rid of the link on the charts. Give me 1 second, guys. We'll get this up here pretty quick. But I would
Wow,
Q.
you're pretty good.
All right. So let's remove all the drawings. We have the NQ on the top, NQ on the top left, the S&P on the top right, the Dow on the bottom left, and the Russell on the bottom right. Want to look at the opening ranges, and again, these are different markets, and they're going to move differently, right? Sometimes if you default to a market, right? Let's say I default to the S&P, and I look at this opening range breakout trade. It was a much cleaner trade today in the Nasdaq than it was in the S&P. And that's okay, right? You may default to the Nasdaq all the time, and that's going to be the market that you trade, and you stick with it for better or for worse. If I was looking at that same exact trade in the Dow today, it wasn't as clean. Right? The Dow kind of sat in that opening range and didn't break out until later in the day. The Russell, same idea here, didn't break out until later in the day. But for me, and the way I trade, I like to have all of these markets up and see which one presents a better trade opportunity. I missed the long today in the Nasdaq, um, but clean opening range breakout trade to the upside. We kind of filled the regular trading hour gap for the day, filled the regular trading hour gap up here before we eventually turned around. But completely different markets. Um, what do you see when you look at this, Coach Paul? Because
Uh, Actually, I did catch the opening range breakout in
nice,
the
nice trade.
Nasdaq. Got stopped out in the S&P, and then because it was initial buying. I mean, it was
Yeah, there
looking
was.
good. But as you said, very suspect on extremely light volume. That was like a little breeze of a volume,
Right.
um, which which non-committal, um, maybe most likely speculative. Um, so yeah, that I mean, if we don't see the break, I mean, it looked really good. Looks like it was going to continue. Um, but we had we and in the Nasdaq we had urgency too. It
Yeah,
broke
we
out
did.
in the third. So it did save me a couple shekels on that, but the move down on the half hour bar, it was I don't have to say it. They had some volume and had conviction that it never recovered from.
Oop, sure did. And we can see in all the markets, right? All these equity markets going to be affected the same way. But on the side, it maybe doesn't show on Topstep TV all the time, but I have this up as a four up on another screen, just because some of these markets present better opportunities than other. Like I said, the Dow was the trade that I took. Coach Paul, I've been building and I sent you a screenshot, building
Yes.
a J trade indicator, and it signaled in the Dow before it did in anything else, with this kind of three-bar reversal pattern right here, before it did in the S&P and the Nasdaq, and that's why I took the trade in the Dow. Uh, but it signaled a short here in the Dow at 42,463. Uh, did I know that this was going to happen? I didn't. It was the initial trade was a 2 to 1. Kept two contracts, traded two contracts, took one off at a 2 to 1, and the other one as a runner. But hopefully we can get UJ. Yeah, like I said, I literally just started working on it yesterday with ChatGPT. Kind of did a brain dump for a couple hours and said, "This is what I'm looking for." Coach Robert is doing a session, and this is a perfect time to plug Coach Robert's session. He is doing a. Let me get the link for it. He is doing a Top Step X API Q&A in Discord today. This is the second class that he's doing. He did one last week. It was recorded. It hasn't been released yet. The team is waiting for this second session because they're going to kind of splice them together as one video. But shout out to Coach Robert. I'm going to be joining that session to try to figure out how to get that J Trade indicator into TopStep X. So if you are interested in using the TopStep X API, you have any questions, if you're a coder, Coach Robert shared with me some pretty cool stuff. Traders building their own dashboard and their own back testing for the API. Make sure you join that session. It is at 5 p.m. Central Time today. So in Discord, right after Coach Hoop, 5 p.m. Central Time. Make sure you guys join Coach Robert over there, and I'll make sure to remind you at the end of the session. But uh, yeah, having the different markets up, and whichever one, and I've said this before, I don't care what market it is. Show me what I'm looking for, and I'll trade it. And that was the Dow today. Um,
I couldn't agree with you more there.
yeah,
If you um if your trading plan is and it's technical, it will work in any market. It's just that simple. Finding that and executing it, well, that's on you. But I'm excited for this new venture here at Topstep. Um, it's I believe it's going to help a lot of traders who accept it. Remove as much of your thinking as possible.
yes, yeah, yeah. The more we can remove discretion, the less we rely on ourselves to make the right decision under pressure. And you still have to click the button at the end of the day, like you said, Coach Paul. Right? It's not just an
Yeah,
automated. Hey, let me just turn this on and it's going to make $1 million for me or make $1 trillion for me. Why stop at a million if the robots are going to do it? But you still have to trust them with your money. Can I explain what I saw in the Dow trade? Yeah, 100%. So let's go. You saw opening range breakout, two-sided trade today. One screen. The one thing I do want to point out in the Nasdaq is the lack of volume at these highs. We talked about it on the 30-minute, but the Nasdaq got up to 21,550s, and look at how we went a pretty long way with a lack of buying. We got pretty extended away from VWAP, and then the bond auction comes in and sells us right back down. But in the Dow, what I was looking at was going to be honest with you. This was UJ. It popped up. The indicator popped up and said, "Hey, it's time to take a short." But what is all that based on? The This spike of volume right here up at the highs of the day, and it wasn't a lot of volume, but it was twice the average at the time.
that's that,
Go ahead, coach.
and that's really important because it's relative.
Correct.
Now, if we don't see the volume behind that, that was twice the average volume,
Right.
and it failed, and that's the trade.
Correct. Correct. Yeah, I think what's important and why it's important to pay attention to that volume because we had that same pattern right here. Wasn't a trade. Look at the volume below average. Another one, another 3 bar reversal right here. Look at the volume below average. No price action. This one popped up and said, "Hey, that one's a little different, right? There's some volume coming into this market. Uh,
And
when when volume comes
buying
in, something's
volume,
going to happen." Yeah, right. Go ahead.
it was buying volume that failed.
Right, right. Yeah, buying volume failed. We closed below, and again, I didn't know that this was going to happen, right? I did not know, and if I told you that I knew this was going to happen, I'd be lying to you. But depending on how you manage your trades, you may be able to catch something like this. And for me, it was not catching it with the full position. Like I said, I went short at 42,463. The risk on this was about 2 ATRs. And the initial profit target was, let me fix this. I'll fix this. Don't worry about it. All right. So that was the trade right there, right? This is the trade plan because I don't know that this is going to happen. But I've also told you guys that I don't trade with profit targets because if a market wants to trend, then I want to try to catch as much of it as possible, right? So my entry right around here when we close below this low, this candle gave me an opportunity to get in, uh, risking about $500 with a two lot. And the way I manage the trade is once we get to that 2 to 1, I'm gonna take one off, right? Because I don't want the market to come back and then turn around and stop me out for a loss or break even, especially if it presented some money on the table. But I'm only gonna take one off, and then with the second one, I'm going to trail. So see something real quick. All right, so I'm out here and you can see I didn't even take it exactly out of 2 to 1, but we started to slow down and I'm out here. But then at this point, I've already secured some money. I don't need to choke this trade. I've already taken some off. So now when that momentum starts to come in and that volume builds, once this volume starts to pick up, this is telling me that there's no reason to get out of this trade, right? What I'm going to do is try to trail my stop to 50% of these big candles, right? So as the market keeps going down, my stop now on this runner is going behind these 50% marks. And you can see there's no reason to get out of them yet. Get a little bit of hesitation right here. And ultimately, I get stopped out on, I don't think I used this one because this was a blue candle. I used this one. And then ultimately, the stop goes at 982, which was about 50% of this candle right here. So, you know, I don't mind holding on to trades when they're doing what I want them to do. And this was that case here. Uh,
Nice trade.
Thanks, coach. UJ says when the volume comes in and it wicked, it shows that it's not pushing higher. 100%, right? So when that volume comes in, again, it wasn't a whole lot of volume, but it comes in and they're not able to push price higher. This is an indication that buyers might have
Yeah,
failed there, right? Whether it's go ahead, coach.
bad buying.
Bad buying. Bad buyers become sellers, right, coach?
The way it works. And it's also a sign. It's a, a sign of weakness. Heavy
Yep.
buying can't take out light selling, is what we used to call Pete Stottlemyre used to call it. And that's a classic example of that. Heavy buying. Well, at that time, that was heavy buying, defined by twice the average volume.
Yep.
Um, what's interesting too is with the heaviest volume of the day was that selling. And we framed that out. It never recovered from that.
Oh,
That's to me is really.
concerning if you're a buyer.
If I'm long, like if I'd be very concerned. B- this came out. This wasn't FOMC. This wasn't. No, it was, and we'll go deeper into that. It was pretty big news in the bond market. Um, this is the highest rates we've had. Um, so there's a problem with floating U.S. debt. It seems to be there's not demand for it. But we'll go into that in a minute. But that volume, that was huge volume of selling, and it stuck.
Yep.
It was like it and continued even as we speak.
So why does it, because Jack was talking about the bond auction all day, why does it have such a big effect? And let's take a look at what the results are, or results of it were. uh Bond auction showed weak demand despite yields above 5%. So basically, from my understanding, Coach Paul, and I'm not an economist, but it's, hey, if you buy this, you get a better return on your money because we need you to buy it, and still no one is buying it. Is that correct? So there's a product that, if we break it down to the simplest terms, product that's being offered at what is a better return than normal, and people are still not buying it.
Well, they're not buying. It's not well bid. It was smaller than expected.
Okay.
This is one of the largest auctions um, we've had. So the high yield on the auction was like 5.4. What was I saw it somewhere. It was like 5.4%. Um, so think inverse. The government's coming to borrow through the treasury and they're offering bonds. And the 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 demand for those bonds was not as big as was expected. Because, well, we had some news Friday. U.S. government debt is not,
Right.
and then there's tax cuts on top of it, and another budget that is deficit spending in a trade war. So maybe Japan doesn't step in. Maybe China doesn't step in. Maybe our biggest trading partners say, you know what? I need more for the risk of buying bonds. And it shows up in auctions. So I don't know what they don't show what I didn't see what is one part is the tail is how much was not um covered at the highest price. Um which can be very important. I have a feeling that was ugly. Um
This looks like it says 1.2 basis point tail.
okay, that's probably it. That base one point that means the traditional buyers were there, but there wasn't and traditional there wasn't the fat part of the auction got thin. I don't know
Okay.
how to explain
Yeah.
it.
No, that makes sense.
It did that auction did not go as planned, and you can see from the reaction. But I mean, we'll look at the bonds in a minute. We see it in the equities.
Yep.
Maybe it's time we bring up a bond chart because
Why don't we? Well, let's bring up the. You want to bring up the 30? Let's do the 30.
let's start with the 30.
Go out to a daily. This is lows of pretty close to lows of the year on the daily chart.
On the daily chart, and they've been waiting, and it's been since the trade war. I just don't. When when you owe the bank money, you don't get to make terms. I don't.
Right.
When your investors come to you, you don't get to make terms. They make terms, or they don't fund you. That seems to be what's going on here. Um, I mean, this is the lowest close in what of the year?
Lowest close of the year. No,
Just
no, just about, just about.
just
January
about.
14th was the lowest close of the year,
Okay.
but this is the heaviest close at that low, right? These are
So,
pretty indecisive candles here. This was aggressive with increasing volume.
see, now part of this is the 30 year is now this was a 20-year bond auction, which I don't want to get people too confused. That relates to the 30-year bond. Um, I don't want to go into technicals, but that's the longest end of the curve. Um, Fed cannot control that end. That is by pure demand. Um, and this is very concerning. That's why the stock market acted like that off that auction. This is concerning because interest rates could go higher no matter what the Fed or the president can't just command it to go lower. It doesn't
Mm,
work that way because you have to find buyers for your debt, and they're not there and at the size they need. So this could get out of control. Where you could say, I don't know, I'm old enough to remember when when Paul Volcker jacked the interest rates from to 18% in the short term. 18%.
Huh.
He made what he did was he made money real. This one is different. This isn't the Fed jacking up rates to make money real. This is US government debt that needs to be auctioned out to the public that's not receiving it well. So what you think about that? What does it have to do? It has to go higher to find more um,
Willing buyers.
willing buyers. And
And
boy,
real quick, just for Billy, so these are the bond prices. So lower prices, right? We're trading the price as the price comes down, yield is going up. What were you gonna say, Coach?
um, yeah, so it's very concerning for the market. And we just said with the S&P back under the 200, this isn't it's an overwhelming um concern. Because now the next is the government has to start competing with the private um market, and then it's just going to drive interest rates up for everyone. So I mean, fiscal responsibility is not happening. Like, this is not a time. Think of your home budget. I know what. Well, well, that's another reflection. So
Right.
I mean, this could really start picking up momentum to the downside, the bonds. And
Psalm 91 has a question. Is there correlation between bonds and equities? If bonds go down, do equities typically follow? I am going to post a link in the chat to a correlation matrix. I was going to bring it up on the screen, but it's a white background. I don't want to blind everybody. But you can take a look at that correlation matrix. And the bonds are on there, so you can take a look at over the last 30 days, over the last 60 days, if there is a correlation, even if it's a negative correlation. But what would you say, Coach, from your experience? Are
oh,
they
absolutely. It is when rates are normal because the bonds are the safe place to put money. But
okay?
when bonds are going higher or rates are going higher, bonds are going lower. What does the stock, the companies that make up the stock market, they need credit too. They pay for credit too. Their price for money is now going up. So that's what I was speaking about. Now you have private industry competing with the government for debt, and there's not enough, especially now that you pissed off your trading partners. Do you think they're out in China going, "Damn, we should have bought more and helped them out"?
Right.
This is, I don't know, it's serious stuff. Um, you- y- this is the part where the Fed what is the Fed going to do?
Right.
Well, you gonna cut rates? And go to your bank and say, well, I've reached my limit in my credit cards and on my credit. Can you lend me some more so I can keep going?
Hmm. No.
No.
Yeah. Lot of stuff going on. Like I said, I still want to get you and Jack to have a conversation about this in general, because I could just sit back and listen to you two and learn myself. But from a day trading perspective, right? We're day trading here at TopStep. How does that affect the markets? We saw the sell off in the equities, but I mean, look at this trade last night, right? This we've are seeing these markets even move overnight. This is a beautiful trending market, right? Where if you're trying to figure out what's going on in the equities, 30 years is expensive, right? 31.25 a tick, but you could go down to the 10-year, and these are markets that are moving even on a higher time frame. Look at this trade from last night in the 10-year. I'm gonna be on slow markets with Dakota tonight, and I might be looking at this just for
It's,
a. Go ahead, coach.
look at the 10-year with the 200 last night.
What is this white line? Technicals still apply, and this is why, as day traders, we can scan and find the market that is presenting opportunity to us. Doesn't have to be in one place. Stay consistent in what you're looking at, right? Top tip of the week this week is consistency. And I agree with everything else on that list. Consistency in your risk management, consistency in your process, consistency in the time of day that you trade. The one I don't agree with is consistency in the market that you trade. I look every day at the same market and sometimes it's not moving, could be passing up opportunity. And this is a beautiful trade.
Yeah, and you know what? Speaking of Japan, their bond market is at the highest rates in decades.
Hmm.
They were at zero, but negative. I still find it trouble saying negative interest rates. It's kind of like negative crude prices. It's the same concept, but it went on for so long. But now reality is setting in, and Japan is our largest lender. Well, now their interior rates are going higher. Um, this is why Ray Dalio is freaking out.
Yeah.
There's if you're a real geek, maybe I am one of those. There's a book called The History of Interest Rates. Oh, I just forgot the author's name. It's a thick 1,000-page book, and this guy goes into interest rates from Babylon.
Hmm.
Um, and I don't think there was any space where you had negative interest rates. It means money's worthless.
Right.
So now it's coming home to roost, and this is the fact that we're even talking about bonds this long tells you how it's a bit of a crisis. Not only that, someone mentioned here, what is a bond vigilante? Those are hedge funds or big traders that race the government. So, like today, you probably saw a bit of that. Like they saw that, they understand the auction process, they get information right away, and saw that, you know what, they can't get it done. Let's sell in front of them. They race
Hmm.
them.
Interesting. It's a trade. It's a market. Free markets. Free
Yep.
markets. Coach Paul, couple questions for you. Did you know Charlie D?
I've met him a few times. I knew his brother well, but Charlie D was one of the greatest people you will ever want to meet in your life. Um, just a massive trader. I got to meet him a few times, but he was probably the best overall trader in the bonds for many years. But he died early, leukemia. Sad part was he was going to donate some marrow to his brother.
Oh,
When they did a test, they found out he had it, and he died rather quickly.
oh,
But he was just now he was a pit trader, so he was quick. He was very, very good. Um, he could read imbalances, and it's funny, but we think, oh, he's a size trader. Well, he traded the size that of the imbalance in the pit, and he was very good at identifying it. Um, Guy who left us way too early.
stuff. Do you think the Fed will start quantitative easing again? That's from Monica.
They could, but they'd have to have higher rates. I don't think. Here's if they do that. The reason they did that before was to ignite inflation,
Hmm.
because inflation. There was talk that inflation's never coming back. Oh, won't comment on that. Well, obviously it did, But in this would maybe this is why gold is acting the way it is. Um, so yeah, I think they're in a trick bag now. I don't think they can. If they did, um, how are they gonna they're still holding assets from the last beating. They could, but I don't think that I think that would panic the market even more.
Thank you for that, coach. Speaking of markets that where the money might be going to, let's just take a quick stop and look at micro Bitcoin. Uh, on a daily, making new highs, pretty close to all-time high on the futures. But I don't know if spot hit all-time highs yet, but
I think it did. I heard it did. I don't follow it.
this is where the money's going.
And we talked about, how stable it's been.
Yep.
It's actually boring. Boring is good.
Yeah.
Maybe this is the new Fed.
I mean, I'm bringing up the
Because you
charts.
can't
I'm bringing up the charts here of the 30-year and micro Bitcoin. They're
now
going in
flip
opposite directions.
flip one of them. There you go.
Yeah.
So let's do a thought experiment here. Demand for Bitcoin, it has to be increasing, right? It's going up.
Yep.
Interest rates are going up. Demand for interest rates. Now, this is the trick bag. They're not high enough because it's not cutting off the Bitcoin and it's not cutting off gold. I'm telling you, this trade war is upset a lot of stability. It's not over.
Yeah.
I find it really concerning that China's pretty darn quiet, and they've been around a long time. That's this isn't their first little foray into this, and they're quiet. Maybe
Why
they're
are they buying Bitcoin?
Bitcoin. I mean, they're not buying bonds, so or maybe they are, but okay. Anybody in sales out there? You go to your customer. Hey, this quarter, I've got more. I've got 10. I'm going to sell 100,000 more widgets to your best customer, and they say, uh, "We'll take 20,000." What? It's supply and demand. So, you know, this is if it's a trade war. Now, what would you expect them to do? Just fold? I don't. It's like, okay, well, we can go elsewhere, just like that customer said, we'll take 20,000 this time, not 100,000. Now, what does this salesman do? He's got to go find another customer. And what does he have to do? Cut his prices. Yeah, this is,
Cutting prices.
yeah. Wow, we really got into this. So,
I'm letting you cook right now. I'm reading comments over here. I'm listening to what you're saying. I'm letting you go. And also, I mean, I'm just trying to transition and keep the story
okay.
going. Money going into micro Bitcoin, right? It's had a pretty nice trend. We did see a sell off, same way we did in the equities after that bond auction. But before that point, Bitcoin is making all time highs in spot. Uh, that's digital gold. Talk about physical gold. What are we seeing here, Coach Paul? They did not break it. They couldn't break it.
They couldn't break. Yeah, watch it tonight. Think about gold is still near all-time highs and interest rates are rising. So to cut that off, you would have to double. It kind of goes to a quote unquote Volcker moment. Like, okay, but that was like I said. I'm going to go back to this. That was done on purpose by the Fed. By the Fed.
Hmm.
not by demand for that. It's a different animal. But look at that gold. But it closed above that 20-day, had a very stable day. Um, yeah, that I'm still liking some gold.
Yeah, closed above the 20-day moving average. If we take a look at the half an hour chart, it was a rally starting last night. Uh, Not the most aggressive move, but kind
No,
of just a slow drift up. I did get long gold, and this is where I was talking about that conversation of holding on to trades that are doing what you want them to do. I got long gold during fast markets this morning. I saw this here. You got to close above it, and I bought it. As soon as I bought it, I said it to myself, coach, and we were talking about we were talking about this the other day. Trade location, where if I see the high volume and VWAP doesn't leave, but I think it's a reversal, right? We got the close above. Entry should be at 50%. Way better entry here. I feel more comfortable holding the trade. Today I took the trade up here. Not as comfortable because of this drawdown, but I held on to it because 50% of this held. Eventually it did work out. I think I took the trade off right around these highs up here. Um, but this was one where trade location completely changes the my view on this trade, right? I could have gotten a 12-point better entry, and I probably leave this and don't even look at it. But because my entry was where it was, and there was no momentum, I was very close to taking this trade off right before it went in my favor. And I would have been okay doing that, right? Because I didn't love the location that I had. Wasn't the easiest trade today in gold.
now gold is in rollover.
Mm,
Um, which really shouldn't affect the cash market. It can, it can, but in a short term, because the next it should be rolling to August. And this shows June.
yep,
Um, so that can have some effect, but overall, we look, gold doesn't stop trending because there's a rollover. It can show some short-term burps, but that's this market still looks good to me. Um, very light volume. That's why I looked at the volume. It can affect the volume itself because this is showing only the June. Um, August could be bigger volume right
right.
now.
I think it is actually. I think it is.
So I don't know.
Can you please?
Um, anyway, gold looks good. So we get a 10% 30-year bond.
Right. All right. Let's see. We got about 12 minutes left. Any other markets you want to talk about, Coach Paul?
Yeah, it's we talked about the yen and the euro currency, or basically the dollar. But let's look at the euro currency and the yen today.
All right. Taking a look at the euro on the 30-minute. What's that trend line?
That trend line we put in was that Friday. Um, we're above the 200. Let's look at last night's action.
We got
Er,
urgency.
When we talked, there was urgency, and now you would think that U.S. interest rates going higher, it should do the opposite. It should attract capital and make the dollar stronger. It's not. It's weakening. And that was with urgency last night. Um, Look at that biggest volume.
Yep.
That's selling volume. We got above it. We're flattened out. It probably what happened at 11 o'clock. What time was that?
This was 9 a.m. your time,
Uh,
9 a.m. Central.
because the currencies really stopped trading around 11 Central when Europe is closing, but it was a great move last night. If we look at it daily,
Take a look at daily. Looks like a lot
that
like
was
that
the
gold
trend
chart.
line. It looks a lot like that gold chart. Yeah, that was where the trend line came. We held it. We've been playing it. Um, it looks very much like the gold chart. It's not the headline news anymore, but this trade war is going on.
Right. Yeah, not resolved yet.
Um,
Does the bond news always make the market react this badly, or was this a special case? I think this is a different scenario. There's bond auctions all the time, right? And this is probably the most time we've spent talking about it on this show. And I think during the daytime show as well. But they happen all the time. And was it Pretty Lily asked, does Topstep X list a bond auction on their calendar? It's not going to show up in the you can put the economic events on your charts. It's not going to show up there. But if you look in the Trader Hub, this 20-year auction is right here. Again, it doesn't show up as a urgent event because more often than not, how many times is that just a, oh yeah, there's a bond auction and we look past it, coach?
all the time.
All the time. They
This
they
one
literally
was,
happen all the time.
but now they're becoming important because first of all, it's the highest rate of the year. This is the highest rate in a long time.
Right.
So that does not help equities. It doesn't help the consumer. It doesn't help homeowners. By the way, if you have a floating rate mortgage, it's probably going up. For people who can't buy a house, no, it's just got more expensive because the interest rate went up. Beneath everything, like I said, if you really want to if you got time and you really wanted the history of interest rates by what was his name was Homer, I believe. Yeah, it could be some time, but if you love history and you love markets, it's a great book. Um, but interest rates affect on down the line, you name it. Everything because the cost of carry, the float, is going higher. Think of your mortgage as the cost to carry.
Right.
If if it goes higher and higher, and you have a floating rate, at one point you're not going to be able to pay
Can't
the
carry it.
bill.
Right.
You can't carry it. You have to do what? Liquidate. Um, so yeah, it's important. It's really important now because as we saw that chart, the rates are. It should have been. I can't say should have. The assumption was rates would go down significantly when inflation went down, and they haven't.
Stuff. Crude oil had some random spike last night and just gave it all
What?
back. That was last night's opening crude oil. I don't know what happened there, but big
I saw,
spike and right back under the 200 moving average.
and I mean, I guess crude oil. Here's another. Well, we can't really put too much. Crude oil has just been random hard trade.
Yeah, that's why I don't even want to spend a whole lot of time on this. Is
You should buy it right now because it's low, and then sell
right.
it when it's high. And you know what? I'm not that kind of trader, but if you are, this could be your perfect market.
Right. Any other markets you want to talk about, Coach Paul? We got a couple of questions here, guys. I appreciate you sending especially in the Coach J chat. Yeah, I saw some questions, some lengthy questions, but we'll try to get to them if we can. But any other markets you want to take a look at before we do that,
Oh,
Coach Paul?
I did see someone mentioning Rick Santelli on CNBC.
Oh yeah,
I've known Rick for better part of 30 years. And yeah, if you get a chance to listen to him, he's very good. Um, he's been around as long as I have, but I've shared many a cigarette with Rick. But he, it's funny, outside of being in front of a microphone, He's a very relaxed individual, but he really knows the bond market. He's been around since the days of Drexel. He- Um, he- yeah, he's pretty good, but we don't hear about him too much because how many times have we talked this long about interest rates?
Yeah, this is the most amount of time we spent on interest rate products for sure.
All right.
All right, let's get to these questions. I'm going to try to summarize them. I'm not going to read the entire thing because we'll spend the next 10 minutes reading these. But two questions. I got one from Shubham, one from UJ in the chat, and Clarence. I'm going to try to wrap all these up together. So basically, UJ in the Coach J chat put, "I'm struggling in blowing XFAs. And we're talking about markets here, but at the end of the day, we have to click buttons to buy and sell to trade these markets." UJ says, "I'm struggling, blowing XFAs and on the verge of stopping trading and quitting. I don't have a set strategy. I get in while the candles are going up or down to get out quickly. I end up taking trades at the wrong prices that go against me, and I reach max loss limit eventually." Shubham says, "I've been in combines since last August, been new to trading US markets. I took my time to understand their intricacies. Looking back, I'm a better trader now than I was then. I get on win streaks driven by strong discipline, structured execution. My losses are rare. But the problem is when I lose, it's not ordinary. It's the day where everything collapses. You get to within a day or two of passing a combine, and then you blow it all." And then we have Clarence in the chat that says, "I'm down $1,000 on my first XFA. I don't know why." UJ, stop thinking about money. I'm going to say it plain and simple. Are setting false expectations for yourself by not having a process. Self admittedly, right? You said you don't have a strategy, but you're looking to try to make money out of these markets. You're doing yourself a disservice. Slow down, stop thinking about money. Think about identifying a strategy that you can say, hey, this is how I approach the markets. There's no guarantee that it's going to work, but at least if you get positive results, they're not going to be random. So you can try to repeat them, right? Trading is hard enough when you have a set strategy. If you don't have a set strategy, you're putting unfair expectations on yourself to try to make money from something that you have no idea how you made it, right? It's like if I, took a basketball and shot it backwards from half court and it went in, and I'm like, oh shit, I'm really good at that. And then I kept trying to do it, right? Because I made it once or twice. At some point, it's going to be like, hey, that's not how this game works, right? You got lucky. So, you know, you're doing something right where you can get to an XFA from a combine. But if you can say in the chat that you don't have a strategy, slow yourself down a little bit and figure out what is working for you because you do have a strategy. Something's working unless you're just taking 15 contracts and passing the combine in 2 days. Then the strategy is to gamble, and that's not sustainable, right? But if you're taking a couple of days to get through your combine into XFA, journal those trades and figure out what is working, and then you call that your strategy and only place those trades. Shubham, for you, you have to learn how to accept losses. Go ahead, coach. Because I'm
Oh
just gonna
no,
go on a
continue.
rant.
No, go on the rant because I was reading something and I
Uh,
scratched my eye. So,
okay, Shubham, Shubham, you have to learn how to accept losses, right? You go on win streaks, you do all the work, you learn different markets, you're a good trader. But if one day is blowing up your account, you are operating under the idea that you have to be right, right? You said you go on these long winning streaks. Your losses are rare, right? To me, it sounds like you're taking more pride in your losses being rare than controlled, right? Yeah, if I only lose once, am I this great trader? If I lose once and it cost me $1 million, but the 100 times that I was right, I only made 1,000. I'm not a good trader, right? Because I'm not maybe I'm a good trader, but I'm not a great risk manager. And at the end of the day, in order to make money from this, you have to be a better risk manager. So you're Shubham, you're taking, and I appreciate you being here all the time. You're taking more pride in being right in your trades than managing the risk in your account, right? Zoom out and be an account manager instead of a trader. Uh, and then to Clarence, I think it was, that said, I'm down $1,000 on my first XFA, and you don't know why. Uh, I would not trade the XFA until you can figure out why, right? You can always go back to a practice account or a combine, but don't blow that XFA um, on randomness. It's just, you know, again, doing yourself a disservice. But anything you want to add to that? at all, coach.
You, you put it um like we, we straight out. We talk about this all the time. Um, First of all, you're a risk manager. I've said this before. If I was the king, I'd rename trader to risk manager. Because what are you managing? You're managing your account.
Yep.
You're not managing the market. Homer Sidney, yes, that's the author. By the way, I before I lose that, that's the author of A History of Interest Rates. But you're managing your account, so you can do one thing to stop that from happening. You could cut it off at 12 to 15% drawdown on
Yep.
any given day. Just imagine if equities were down one day
Mhm.
50%,
Oh my gosh.
30%,
The world would stop.
right? I mean, that's the idea. I mean, I understand each, but I think the basic is it takes more time than we want. You have to struggle, then you have to struggle well, to learn that you're managing money. You're not managing the market. So yeah, I can't say it again. I cut it off at 12%. Done. It's about survival. You're losing, you hit your DLL and it's what they give you is 50%. You need to change that now. And then go back and look at all those days where you were down 50% and go, if I would have cut that off at 12, 15%, it's a lot of money. Then I'm not resetting because it's too easy to reset. Fuck it, I'm just going to reset kind of thing.
Yep. Yeah. 100%. It's just funny. I don't comment much on what I've seen. So I see sometimes there's the conversation out there. Oh, hey, you know what? With these combines, just speed through them, right? Just get through them as quick as possible so you can get to the XFA. I'm gonna call this out. Anybody who is saying that has an interest in the combine being blown or the account being blown before you get to a payout. Plain and simple. I'm going to say I don't get paid from Topstep to sell accounts. I get paid to be here as a coach and as a presence on this show and to help the community out. Anyone who's saying, "Hey, just rush through your combine," uh, either found success because they flipped a coin, or they have an interest because they might be getting paid some affiliate money from doing that. I don't understand that because at the end of the day, especially in these accounts, you need to be able to trade in the account for at least 5 days to get a payout. So why condition ourselves to rush through the beginning part of it and never actually know how it is to trade an account for more than 5 days if that's what you're gonna have to do to get a payout? Don't listen to that shit. I'm sorry. Um,
And we're getting real now.
yeah, because there's false expectations being set all over the place, and it's just not fair to the people who are putting their money behind this and trying to do this. Take your time with this process, and then that goes for everybody. So for the three traders that I just talked about, or for anybody else who might be listening, slow yourself down. If you're one of those three traders, you should not be trading in the minis. You should definitely be trading micros right now to figure out this process. But everybody, please slow down. Rushing doesn't work. It works for a couple of people who clip it up and post it on social media, but we know what the success rate is and how much of that failure is due to trying to get to the process, your end goal, whatever that is, too quick. Uh, Coach Paul, anything you got before we go?
I just got to give a shout out to Alec Sharma.
Okay.
I hope I pronounce that. House never gives you the edge to win. It's your own job. I just golf clap for you. Think about that. That's exactly it. You need to get the market, replace the house with the market. It's not there to give you an edge. There is, you have to develop your edge and execute it. And understand this. It doesn't come out in a week, the edge. If it's an edge and it's a process, it comes out over time. So if you don't know if if you're hurrying, whether you just got lucky, and by the way, I would make the case that 90% of the time it's you just got into the right, you got lucky on your time. You
Right.
did, it wasn't the process. If you want to do this over time, you have to build a process and you have to give it more time. And when you do, you'll be rewarded. So be quick, don't hurry.
Go. All right. Uh, one last question before we get out of here. Sahaj, how do you anchor view up? In the drawing tools on the left side over here, 5 icons down, you have projection tools. Halfway through that menu is anchored view up. Click on that, click on the candle, that anchors your view up. Sahaj, hopefully you're still here. Uh, had to end with a light question. But we want to appreciate everyone for joining us. Today, hit that like button if you haven't done so already, or don't. Give us any suggestions for how we can make this show, improve this show, and help you guys out. Um, but we have more sessions coming up. Coach Hoop doing a class in Discord in about the next 10 minutes or so. And remember, Coach Robert, let me put the link to Coach Robert's event in the chat. Copy this link and put that in the chat for you. Coach Robert doing a Topstep X API Q&A. Then we have Coach Ray, Coach Vince, 6 p.m., 7 p.m. Central Times. And then, of course, Dakota with Slow Markets at 7:30. I'll be joining Coach Dakota tonight for Slow Markets. So I will see you all then. Trade well, manage your risk, zoom out, and we'll talk to you all tomorrow. Coach, thank you.
Thank you. Bye.